Ladies and gentlemen, hey, how you doing? This is Daryl Barnes, president of Deacon Wealth Management, and I wanted to wish everybody a wonderful 2024 and wanted to go through basically a very quick market outlook. We have a very full presentation from LPL's research department, and I'm just going to highlight a few of those areas. We here at Deacon Wealth hope that you really had a great 2023, and we hope that you have a healthy and prosperous 2024. The last few weeks have been fairly interesting. As a firm, the advice we provided for 2023 turned out pretty well, and it's led to quite a few questions about our predictions for 2024. And I tend to get a bit of a chuckle out of anybody that asks me to predict the future, because my answers are kind of like a magic 8-ball. You know, it depends. It may be or it may not be. So I don't get into trying to predict the future. What we try to do is to identify macroeconomic developments, demographic developments, and those trends, and try to use them to our advantage. Kind of like surfing. Now, I've only been surfing once, but I can tell you what you try to do when you're surfing is to come out alive, come out healthy. And you want to try to find waves that are good and sustainable, and you wait for your wave. And you finally find one. When you see it coming, you start to paddle. So we have to do the work up front, and then you'll catch the momentum of the wave. There's some times that you're going to see a wave and it just kind of doesn't have enough energy for you. Or there are waves that are dangerous and you need to avoid them. And then ultimately, once you find the perfect wave for you, you get ahead of it and you ride it along. Ultimately, your patience will pay off and you'll find that perfect wave. And it's kind of like investing. I mean, you could sit out there on your board for a very long time. In fact, Warren Buffett has a great analogy. It's kind of like you're at bat playing baseball and you have an unlimited number of strikes. So you can wait for your absolute perfect pitch. There might be 1,000 strikes that come in. But unless it's in that particular zone where you really want to hit it, you don't have to swing at it. So investing is kind of like that. And at the bottom of this video, what I've done is I've put the link for the market outlook in the bottom of the screen so that you can link to it. I think it actually leads you to our website as well, which is www.deaconwealth.com. But if you followed any of my videos in the past with regard to these market outlooks, you understand there are some things that I agree with and there are some things that I don't. So rather than go through the presentation slide by slide, I've just prepared a few comments that I find revealing and interesting. And LPL says that we believe a recession is likely to emerge in 2024 as consumers have more debt. They're going to deplete their excess savings and they're no longer able to keep up with debt payments. So that's one of the things that we're kind of worried about with regard to a recession. And leading indicators that they're watching include an increase in serious delinquencies in credit cards and auto loans. And we're expecting the spending splurge to end. If you'll keep in mind, 2023, we really just kept on spending money like crazy as consumers. So in 2024, LPL's research department doesn't think that the consumer is going to be willing to spend, which can lead us into a recession. And we expect the Fed to be less focused on inflation and more focused on the other part of their dual mandate, which is stable growth. As it's already been highlighted, inflation will still hover above 2%, the long-term average. And it remains a concern, but they'll be less likely laser focused on inflation as the number so that we can have a stable growth economy. When it comes to the job market, there's been a shift. Okay, we've had a lot of telework. We've had a lot of folks that have changed jobs over the years, and what we're seeing companies do is react to that. We're seeing more hybrid positions and we're seeing more part-time hiring. So we think that's going to continue to be the trend moving forward. So, and of course, that hybrid model only works in certain sectors. You know, if you've got to be at a job performing a task every day, that's a lot different than somebody who can be a freelance person. Let's say it's somebody who does videos for a living. You know, they can do it in their office. They can show up at a client's office. There's lots of different ways to make that happen. So we had a great market in 2023. I don't know if you remember all the ebbs and flows and the ups and downs, but the first 2 quarters of last year were very volatile, and we were basically telling people to stay the course because we did see good things coming, even though we were really suffering some hard times there at the beginning. And that's where our long-term perspective really helps us out. As the next 12 months of the bull market gets underway, market history tells us solid gains might lie ahead. Of 12 such periods since 1950, the S&P 500 has gained an average of 12.6% and was positive every time. A gain of this magnitude seems reasonable given the potential for support from the Fed as inflation falls. With the economic data continuing to reflect a more resilient economy than we originally expected, we think Treasury yields are going to likely stay higher for longer as well. We're looking for the 10-year Treasury note to actually stay between 3.75 and 4.25%, which is going to keep mortgage rates a little bit higher than we had gotten used to the last several years. And that's going to put a little bit of pressure on real estate prices. So we may see a little bit of a downturn in the construction business, that particular sector of the economy. Locally, we're not seeing that. Locally, there's a high demand for housing, and the market has stayed pretty strong. So we're talking about national trends here. It's quite interesting to see these interest rates return to normal, normal being about 3.25% on T-bills and stretching out as far as 5.25% on 30-year treasuries. We haven't seen that in a long time. But as those interest rates stay where they are or go a little bit higher, we tend to see the price of those bonds fall. So you need to be aware that that happens. So we're not looking for big gains in the bond marketplace. In fact, you probably shouldn't be looking at bonds unless you have a defined note that you need to be paid off at a specific rate, specific time, and that way the bond market can help you. But we're not looking for that in terms of dynamic growth. Excuse me. And there are 2 other scenarios that are out there. One is a traditional recession or a re-accelerating economic environment. And while the economy might not be as strong this year as it was last year, there's still quite a few opportunities. Depending on the source, there's currently somewhere between $5 and $6 trillion in money markets, which is typically slated to be invested in the markets. This provides quite a bit of dry powder to help the market move forward. A wild card for this year is the presidential election. At this point, it appears to be a rematch of 2020 with Donald Trump and Joe Biden facing one another. Excuse me, but I don't believe we've seen the whole contest kind of materialize at this point. It may be that there are 2 other candidates that are out there. We're not really sure, but I think we're going to see quite a bit of political ebb and flow. You're going to see a lot of folks trying to get reelected, including the president, and that can make for some interesting markets. And suffice it to say, there's quite a few things on the horizon that can affect the markets for 2024. We'll continue to navigate them in the most prudent fashion that we can. And if you've got questions on the markets or your personal financial situation, please feel free to reach out to us. Our phone number is 540-371-8585. My email address is dbarnes@deaconwealth.com, or you can always go to our website at www.deaconwealth.com. We hope that you have a wonderful 2024. We hope it's full of health and prosperity. And if there's anything we can do to help you out, please give us a call. Thanks, and have a great day.